So guys, welcome to another episode of this course. So in our last course we discussed about market structure. So today I will be teaching you liquidity. You understand? The way I view liquidity and how I made it easy for me to spot in the market. You understand? So I see that most traders tend to always have problem with liquidity. You understand? Liquidity, they taught us that liquidity is something like a double top. You understand? So something like what do you call it? Double bottom. In liquidity, like we have trend line liquidity. That's when I started trading this type of concept back then. This was what I was taught, and you cannot, like, I will tell the truth, you can hardly find this in the market. I won't lie to you. You can hardly find this double top, double bottom in the market. So I've discovered the best way to look for liquidity in the market, which is how I'm going to teach you. So we have, first of all, what is liquidity? Let me write it down. Liquidity, I really do not have an explanation for liquidity. I will just say liquidity is money. So let's just leave it like liquidity. Liquidity is what? Liquidity is money. In order for the market to push up or push down, and just say the market is going up, higher high, higher low. In order for the market to continue pushing up, the market needs money, needs liquidity. You understand? So I will just show you the patterns. As technical traders, we just need patterns. You understand? You do not need all this long explanation to read what liquidity is all about. If you read about it and you don't know how to spot it in the chart, then it's of no use to you. Those information you read about is of no use. So I have two types of liquidity. You understand? I want to go straight to the point, and I will call this inducement liquidity. Let's call it I think it's induce. If I do not spell it well, you guys, inducement liquidity. And we also have, I think I will name it structural liquidity. Structural liquidity. So my structural liquidity is different from other traders, so I will not lie to you. So I will have to put this right here. So let's make this like this. Yeah. So the two type of liquidity that I use, and to be easy for you to spot, to always show in the market, is inducement and structural liquidity. Now I want to first of all talk about inducement liquidity. Okay, inducement liquidity. Inducement liquidity is when the market is pushing on a lower low, lower high, then creates a lower low. Now creates a lower high and creates a new lower low. Now, what have we been taught as traders? You understand that, okay, we can say that this is let's start with this. This is a trend line, first touch, second touch, right? So trend line traders, what will they be doing? They will wait for the market to retrace back down to give us a second touch, and we are going to be selling, right? Sorry, not we. They will be selling, because this is what they are being taught, and this is literally this is what I learned when you started trading. The first or second touch, they are sellers right around here. You understand? They will say that, okay, this is the second touch and third touch of the trend line, so I'm going to sell here, and they will sell, right? And there's no problem in that. You understand? So what will support and resistance traders do? They will say that, okay, this was the previous support area, Now this support area will serve as a resistance. Therefore, if markets come back to this place, they will do what? They will look for a short position. So let's say they will look for a short position here, and their stop loss will be where? Their stop loss will be right above this high, and they will be targeting lower prices. Right now, supply and demand traders. Let's delete this. You know, supply and demand traders, when we have a break of structure, when we have a break of structure, you understand? When we have a break of structure, let's say SMC, all these like normal supply and demand traders, you know that supply are in control, so they will be selling from a supply level here. So what do? What did they do? They still expect the same thing to repeat itself, so they will have a supply area here, and whenever the market goes up, they will do what? They will sell. So their stop loss will be here, right? So now I've showed you support and resistance. I've showed you supply and demand traders where they are selling from. You understand? So you know that there are lots of liquidity resting above this high. Let me delete this. You see the amount of liquidity resting above this high. Why? Because this is what they teach us like if you want to learn how to trade, right? This is the information that is available online, that this is liquidity. Sorry, this is lower high, lower low, lower high, lower low. So we are expecting what? A lower high and a lower low. So because of that, lot of liquidity will be above this high. Lot of liquidity, so many stop losses. People will be selling, and where will their stop loss be? Their stop loss will be right. Sorry, why even go up like this? Right, what? Above this high. Sorry, right above this high here. You understand? So what the market will do? The market will come back up. Instead of the market to do something like this, what the market will do? The market will go back up, take out this high, tap into this other high. You understand? Let's say there will be a POI above that this previous high here. After they take out this high, they will sell back down. They will sell back down. And now this is where things get interesting. So let's say they are selling around here. Let's say they are selling around here. This is the stop loss, and they are selling. Let's say they sold right here, and sorry, I don't know. Okay, let me bring this down. So let's say they sold around here, right? And what happened? The market did was hit their stop loss. So this is what they will do. They will say that, okay, sorry guys, pardon me. So they will say that, okay, the market was bearish before, but the market now has done what? The market has changed structure. So now they say the market has changed structure. They will start looking for buys around here. You understand? They will start looking for buys around here. They're waiting for the market to do what? Retrace back down and continue pushing up. And there's nothing wrong with it. It's just that they already started manipulating traders from this point. You understand? So what the market will do? The market will take out this high, sweep this high, use this high as liquidity, and this is the best place to get in this sell. Instead of taking a sell right here, you take a sell above that high right here, and you target lower prices, and the market will immediately the market will do what? Spike to the downside. You get? So I will show you guys the bearish example now. So for the bearish example, right? This is the bullish example. For the bearish example, they will do what? Sorry, for the bullish example, sorry, they will give a high, give a low, give a high, give a low, right? So trend line traders or support and resistance traders, where will all their stop loss be? Their stop loss will be what? Below. Supply and demand traders, their stop loss will be below this low. So everybody will be buying here. Everybody will be buying here. And what the market will do, the market will retrace back down. Will retrace back down, take out the stop losses, right? Come to this the zone below this one, and people that was buying, we think that this is a change of structure. You understand? You know change of structure now. I thought change of structure in my market structure. So they would say, okay, the market will retrace and do what? Start selling back down. So now where will their stop loss be? Their stop loss will be above this high right here. So the market they are expecting the market to come back, tap this zone and do what? Sell down. So now they got stopped out here. What will they do? They will wait for the market to retrace back to a supply level above this place, right? And they want to do what? They want to sell back down to the downside. So what we smart money traders like us do in this scenario, we know at the market there's so many stop losses here. First touch, second touch, third touch want to buy here. Supply and demand traders want to buy here. Support and resistance traders, this is support and resistance, they want to buy here. Everything they want to buy at this same zone. So there's a lot of liquidity there. What do? We wait for the market to take out those liquidity and we buy below the what? Liquidity. So our stop loss will be something like this, taking out all the liquidity. Let me mark this out. Our stop loss will be something like this. Yeah, our stop loss will be something like this. Our entry rather will be something like this. We'll take out the liquidity, take out everybody, and we will continue doing what? Pushing to the upside. Now this is the explanation, the easy way to understand this liquidity, right? The first break of structure, second break of structure, we use the low as liquidity and we look for POI below this low. So this is the first type of liquidity. This is inducement type of liquidity. You have to screenshot this and I will show you so many examples in the chat. You understand? I'll show you an example right now before we can move into structural liquidity. I want this to be as neat as possible, so you can rewatch this video and it won't be hard for you. You get? So let's go to the chart. I'll show you this inducement liquidity, then we can move on to the structural liquidity. So guys, I want to show you examples. I'll tell you the truth. This first type of liquidity is very, very hard. Let me believe it. This first liquidity that I want to teach you is very, 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 very hard. You get? But the most easiest liquidity you can spot in the market is the structural liquidity, which I'll be going into next. But if you practice very hard, you'll be able to spot this inducement liquidity. So remember what I taught you guys. As you can see, this market, look at the market structure. You can see we had a high, we had a low here, we had a high, we had a low, we had a high, higher low. Then we had a new higher high. So something happened here. We had a change of structure. Now let me bring this out. So I want to explain to you guys. So now, a change of structure. After a change of structure, what are we expecting? We are expecting this, right? We are expecting a lower low and a lower high, right? And that's what happened here. The market did what? The market created a lower high and a lower low. Now if you come into the market, right, what will you do? First of all, let's say you miss this trade, or you cut this trade, the change of structure, you cut this sell, right? You come into the market, you would want to sell from here too. You get trend line traders, we want to sell from the third touch, which is somewhere, let's say around here, and their stop loss will be right where, above this high, like I taught you. Support and resistance traders still above this high, so there will be so many liquidity right above this high. So what do? You don't sell from here. You look for POI above the liquidity. So what do you want? You want the market to push up, take out this high where everybody is selling from, where audio stop loss is, and do what? Sell back down. Now that is what happened here. Like this thing I just drew for you guys right now. Let me delete all this so the chart will be neat. As you can see, this is the high and this is a new low. So many traders, we want to sell from here. Can't lie, seriously, they want to sell from here. Why? Because we had a break of structure to the downside, right? So they want to sell from here. Of course, there's liquidity and everything, so why would they sell from here? And again, let's say they were selling and the market hit their stop loss. What is this? A change of structure to the upside. So now their stop loss will be below this low, and whenever the market take out this type of liquidity, the market immediately runs down to the next stop loss with momentum, with one push pull to the downside. You get? So this is what happened, and you can see this one candle. You can see how this candle slaps this low, like it took it out with no remorse, just like one shot it like once. You get? So this is why I took a sell right here, because I understood that this high was liquidity, and the best way you can just take a sell from above the liquidity, something like this. I don't want to talk about POIs. If not, I could have showed you guys the POI right here. This is another block, but I'll teach that later in the next video. As you can see, clean trade, you understand? But I took a sell in the lower time frame. I think in the H1 I will show you, and this is the second type of liquidity, which is structural liquidity. I will explain to you guys how I was able to take this trade. Now let's go to the buy side. You understand? Like I said, this strategy is very hard. It's very hard. You need to master it. You need to study very hard in order to see it very clearly in the market. But I will explain to you guys. So if you look market, and again, this type of liquidity, you can find it when the market wants to reverse. You understand? Most of the time when the market wants to reverse, that's when this type of liquidity shows up. So we're pushing on a lower low, a lower high, a lower low right here, and we did what? We had a change of structure. As you can see here, we had a change of structure. Now the market did what? Retraced back down and broke another structure. Yeah, so the market broke another structure. If this is the forward time frame, so imagine people in the lower time frame. I don't want to go to the lower time frame. You can see we had other block right here. It's an other block. You can see first touch, second touch, What are they expecting? Third touch for the market to push up, and support and resistance traders. So many stop losses to be here. They'll be buying like this, and their stop loss will be right here. So what the market will do? What do you do as a trader? You look for a POI right below this liquidity. So the other block, last down candle, you wait for the market to retrace back down and you sell. You buy towards the upside. And that is just the example. You will hardly see something like, you will hardly see this type of liquidity in the market. I won't lie, you will hardly see it. The liquidity you will see most of the time is this structure liquidity. You will see this structure liquidity more of the time, and I want to show you guys. Let me arrange this chart. Okay. So let's make this smaller so there will be enough space in the chart. Liquidity, make it smaller, then we delete this, then let's make this here. So I want to show you guys the structural liquidity. Structural liquidity happens all the time. It happens all the time in every trend. You understand? This is the one that will blow your mind. And when you understand the structural liquidity, your win rate will increase. I give you on, like, I want to TikTok this thing now. Like, just believe me, study hard. This structural liquidity I want to show you guys, this structural liquidity will change your life forever. So let's hop on to the next type of liquidity. Now, structural liquidity is just like, if you hear the name, you understand what I am saying. Structural liquidity. So this is inducement liquidity. Let's go to structural liquidity. Now, structural liquidity is very simple. You know, when the market is pushing down, lower low, lower high, lower low, I said that you wait for the market to retrace back down and you sell. You understand? The same thing. Let's do it like this. Market is pushing on a higher high, higher low, higher high, higher low, higher high. You want the market to do what? Retrace back down and buy. Retrace back down and sell. That is just the simple market structure. Now, how do you apply structural liquidity? Now, for structural liquidity, you need to see little structures. That's why I called it structural liquidity. Inside, before the break of structure. Right? Trust me, if you master this structural liquidity, you will never ever, like, your win rates will go up to at least 80%. Just like me, my win rate is around 80%, and I have the proof. You can go to my Telegram channel and you see at least 70 to 80% win rate. That's what I have, believe me. So as you can see, this is a break of structure. Now, these are the liquidity, because these are little structures, are liquidity in the market. All these highs are liquidity in the market. So as a trader, you need to wait for at least one of them to get taken out before you can sell. You understand? So you can just, when the market goes up, you can just sell right here. Right? You can just sell right above the liquidity. And you see that this liquidity, most of the time, is around those premium level like I told you about. Remember, I told you guys that if you drag your Fibonacci from this high to this low, you understand, you will see liquidity around those premium zone. You understand? So let's go to the bullish side of things. We have a high, we have low. Before the break of structure, there will be structures inside. Normally, if I want to draw this diagram, I will just draw only one, but I'm just showing you, like, this is literally what is happening in the market every time. You will see more than one structure. At least you will see more than one, but you can see only one, but most of the time you will see like 2 or 3. So I'm always putting 2 structures here. So you see 2 structures before the break of structure. So you identify this as a break of structure, and you wait for the market to retrace back down to a discount level and let the market take out liquidity before we can buy to the upside. So you identify this as a break of structure, sorry, as a sweep of liquidity. Then you can now buy and target to the upside. This is the best way to trade. And what is the difference between this structural liquidity and the inducement liquidity? The inducement, the structural liquidity, before the break of structure, we had little structures inside this range before the break of structure. As you can see in this bullish scenario, we have, before the break of structure, we have little structures in it, right? Now for the inducement liquidity, before we break the structure, there is no liquidity. You understand? Before we have the first break of structure, there is no liquidity. So the market will just create normal break of structure, use this high as a liquidity to go down. The same thing, break of structure but no liquidity inside. So the market will go back down, create liquidity and shoot up. So now this is the liquidity we need in order to use this low to buy. That is the difference. As you can see, there's a break of structure and there's liquidity. So now we are not going to be buying up to take out this high, because there's already liquidity here, and we will continue doing what? Pushing to the downside or to the upside. So let me show you an example, and I will show you so many examples because I use this type of structural liquidity most of the time. So I want to show you guys the structural liquidity, and what is the best way to show you guys than to prove to you that it works. The best way to show you guys that structural liquidity works is to prove to you that it works. And I took all these trades. I even took a buy right here, but it's not with structural liquidity. That's why I did not mark it out. I took a buy right here. Go to my Telegram, you will see all this trade. I drop all my trades for free, and most of them I hit stop loss. But yeah, where did I even hit the stop loss safe? I think it was around here. I hit the stop loss right here because I was selling right here. And yeah, we make mistakes, and that is the reality of trading. You hit stop loss and you hit TP. But once you start using liquidity, like I said, your win rate will increase. So I will break down GBP USD, why I took sell, why I took a sell here. I don't need to explain these two, particularly this one, these two, and I will explain Euro USD. I took a buy right here, and there was a buy right here. There was a buy right here using the same concept. There was also a buy right here using, like, I will explain everything before I end this video. So let's make it very quick. Now, liquidity. This is the high, right? This is the high that did the break of structure. So this is the high that did the damage. This is a break of structure to the downside. BOS, a break of structure. Now, before the break of structure, do you notice anything inside this range? You can just call them bump in the road, right? Do you notice anything inside this range? You will notice that the market, before the market broke structure, the market came lower, pushed up, and broke structure. This is what you want. This high is the liquidity. This high is the liquidity. You understand? So what you want to do is you want to look for POI right above this high. So this is the POI right above this high. The market did what? The market went up, tapped it, the supply area, the other block, and started doing what? Selling to the downside. And that is why I took the sell. You understand? The reason why I took a stop loss was because I did not pay attention to liquidity, and every trader make mistake. You understand? Nobody is perfect. So I'm the only one that knew what I saw here that made me went against my rules, and I took a sell. It went almost to my TP, but went back and swept the liquidity. So now this is a break of structure. Right? This is a break of structure. why the market was breaking, why the market broke structure, what did the market do? The market was creating structural liquidity. So this is the first structural liquidity, because this is the main high. This is where the push started from. So this is a structural liquidity 1, structural liquidity 2, structural liquidity 3. You understand? So when the market come back up, the market had to sweep at least one of those liquidity. Sweep one of those liquidity, and you use this other block. And now you will ask me, how do you know that this other block is going to hold and not the one above? That is when you add everything together, add the market structure and everything that I've taught you from the beginning of this course currently to this moment. Now, I told you that once you draw your Fibonacci from the high to the low, you wait for the market to do what? To take to the premium zone. That is 1. 2, you look at the market structure when going up. Now we have added liquidity to the checklist, right? So we swept liquidity. Look at the structures: higher high, higher low, higher high, change of structure, Quasimodo. Let me bring it out so you can see. This is the same pattern I told you about in my first course. Like, watch the first video. If you just started watching this video, you can go back to the first one and watch it. This is the Quasimodo pattern, and this is exactly why I took this sell. This is exactly why I did what I took this sell. A Quasimodo pattern. As you can see, high, low, higher high, higher low, higher high. Then we had the Quasimodo. I took a sell directly from here. Easy peasy. You understand? This is how you use market structure, liquidity, and Fibonacci. You understand? This is structural liquidity. This is structural liquidity. I will show you another example on Euro USD. Now, this is the low, and this is the break of structure. Now, before the market broke structure, do you notice anything? Look, I just pay attention to this. You will notice that before this market broke structure, this market created the low, a structural low, before finally breaking the structure. So therefore, this low is liquidity, right? And if this low is liquidity, where is my POI? Other block is my POI. So what am I waiting for? I'm waiting for a structural change, a Quasimodo. And if you go to the lower time frame, I don't want to go to the lower time frame, like H1, you will see a Quasimodo pattern here. That's why I took this buy, and immediately it went to profit targets. You understand? So now, if you call this the low, let me delete this. If you call this the low and this is the high, what are we waiting for? We're waiting for the market to retrace back down to a discount level before we buy, right? Where is the liquidity? This is in an inducement liquidity. This is in inducement and inducement liquidity. You see how the first liquidity and the second liquidity played out in the market. They even bought. You understand? First touch, second touch traders, trend line traders, all they want to buy here. And you know that I even pity the trend line traders more, because when they buy here, this is where their stop loss will be. Their stop loss will be even bigger. But smart money traders that are wrong will be buying here, and their stop loss will be here. You get? But we that understand liquidity and liquidity inducement, you know that this is liquidity. You understand? And you wait for the market to retrace back down. You see the tap. Immediately the market tapped, cleared that liquidity, tapped it, and did what? Started doing what? Pushing to the upside. Now, if you want to be more conservative, you can just wait for the Quasimodo, the change of character. When the market retreats back down, this is where you get your position. This is a confirmation entry. You understand? Confirmation entry. And now this is why Euro US is pushing up, and we are pushing up to this upside. So this is all you need at the end of the day. You understand? So this is two type of liquidity. I think I will end the video here. I will show you. Should I show you more example so you guys will believe that this strategy really works? I've showed you enough example. If you want to see more example, yes, go to my Telegram. I will show the Telegram on the screen. Join my Telegram. I share free trades idea, and I go live on TikTok. You understand? If you want to ask me question, you can come live on TikTok, and I'll be dropping the link on my Telegram anytime I'm going live, and you can ask me questions. This is how you trade. This is structural liquidity, and this is inducement liquidity. These are the only liquidity you need. If you want to master this, just screenshot this and practice it. You understand? You will thank me later. So guys, if you like this type of content and you want me to keep making things like this, do well to smash the like button, subscribe to my YouTube channel, and I will continue making videos just like this. Peace.